What does regular divergence typically signal? A. Continuation of the trend. A. Breakout confirmation. A. Strong trend with volume. A. Potential trend reversal. Which of the following best describes bullish regular divergence? Price makes lower highs. The indicator makes lower highs. Price and indicator both make lower lows. Price makes lower lows. The indicator makes higher lows. Price makes higher highs. The indicator makes higher highs. Incorrect. Correct answer. Price makes lower lows. The indicator makes higher lows. Where should traders usually place a stop loss in a confirmed bullish divergence setup? Far below the last trend line, above the resistance level, just below the most recent swing low, at the highest point of the last candle. What's the benefit of using MACD and RSI together to confirm divergence? They show both momentum and trend shifts. They avoid the use of candlestick confirmation. They give the same signals. They remove the need for price action. Which situation reflects a high volatility bullish setup for setting stop losses? Use a fixed pip amount every time. Place a stop loss below RSI. Place a stop loss above the last high. Place a stop loss below the lower Bollinger Band or 20 EMA. Which situation reflects a high volatility bullish setup for setting stop losses? Use a fixed pip amount every time. Place a stop loss below RSI. Place a stop loss above the last high. Place a stop loss below the lower Bollinger Band or 20 EMA. You're analyzing a chart where price makes higher lows and MACD makes lower lows. What type of divergence is this? And what's the likely trade? Hidden bearish divergence. Sell at support. Regular bullish divergence. Sell after rejection. Regular bearish divergence. Short immediately. Hidden bullish divergence. Buy after confirmation. Let's combine indicators. In this lesson, you'll learn how to boost your entry decisions using confluence zones, areas where multiple indicators align to strengthen your setup. By the end, you'll know how to combine MA, RSI, and MACD to increase your confidence in trades. A confluence zone is a price area where multiple indicators, like trend lines, Fibonacci levels, MAs, RSI, or MACD, agree. Exactly. When two or more tools highlight the same level, it increases the likelihood that price will react strongly at that zone. Relying on a single signal is risky, but when tools like RSI show momentum support, MACD confirms trend strength, and price aligns with a moving average, the odds of a successful trade improve significantly. Imagine price pulls back to a 20-period MA, RSI hovers near 45, and MACD begins to turn upward. This alignment suggests a potential bounce with increasing momentum, a textbook confluence zone. What makes it strong? The MA acts as dynamic support. RSI confirms the pullback isn't oversold but near neutral, implying potential continuation. MACD turning up confirms bullish momentum is building. Combined, this gives a high confidence long setup. Is it a confluence? You are observing Meta stocks. Price is near the 50 MA, RSI is 55, and MACD just crossed above its signal line. Quiz: is it a confluence? Explanation: exactly. Even though RSI isn't in the oversold zone, the alignment of the 50 MA, a supportive RSI near 55, and a fresh MACD crossover upward creates a strong confluence. This suggests momentum is building and the zone is valid for trade consideration. If indicators are scattered, say, MA is far above price, RSI is flat, and MACD is declining, there is no confluence. It's better to wait. Misaligned signals increase the chance of false setups. Is this a good long opportunity? After a strong downtrend, price bounces near the Fibonacci 23.6% minus 38.2% zone. The MACD histogram is shrinking and the MACD line is starting to rise toward the signal line. RSI is climbing from below 30 toward 41, signaling recovery and momentum. Quiz: what would be your next move as a trader? Explanation: well done. You're seeing early signs of reversal, but confluence is strongest when confirmation happens. Waiting for MACD to cross and a bullish candle at the FIB level gives the trade more credibility. Confluence zones are stronger when aligned with the overall trend. Use MA or MACD to confirm trend direction, then look for price reactions supported by RSI or volume. Hold or stop. You're trading Alphabet Incorporated. You entered a long position after spotting a confluence. Price bounced off support. RSI began climbing from oversold, and MACD gave a bullish crossover. Now, price is pulling back slightly and testing the moving average. MACD is still positive, and RSI holds above 40. Quiz: do you hold or stop out? Explanation: smart call. The setup is still valid. Price is holding above the MA. RSI is stable, and MACD hasn't reversed. No clear breakdown, just a normal pullback. The more you practice spotting confluence zones, the more intuitive your entries become. Use demo accounts or screenshots to train your eyes on chart structure plus indicator alignment. Here's the key takeaways. Confluence equals multiple indicators aligning at one zone. MA, RSI, and MACD combined give stronger entry signals. Wait for confirmation before acting. Avoid trades with conflicting signals. Hold setups unless structure clearly breaks. You've learned that confluence zones are powerful tools for filtering high probability entries. Great job. Now, let's put theory into action and test what you've learned through real trade scenarios.